Okay, so you guys know this is going on YouTube. So if you can't stay for the full 25-minute presentation, I get it, no problem. You can catch the replay on recording. Okay, we're going to be looking at the 2016 stock selection. And if you have never watched the ICT mentorship, not the ICT tutorial page on my website, the Inner Circle Trader at, or theinnercircletrader.com rather, the tutorial is on there. It's free. It's been there for a while now, and I outline how to go through picking strong stocks that should have leadership on the outside. And admittedly, going forward, I did not take any of these as a trade. Okay, I was sitting on the sidelines this year because it's an election year. There's a lot of volatility expected because of, well, everything. Just look at the news wires and you'll see there was all kinds of uncertainties. But I go through the process of teaching how to go through index stocks, and we used the Dow 30 in that teaching tutorial, and I'm going to basically pull out the ones this year that outperformed using that same criteria on a stock selection tutorial on my website. Some of you probably are not even interested in stocks, and I get that. Some of you are hardcore Bitcoin traders. Some of you are Forex traders. Some of you are futures traders, and you're just simply not interested in trading stocks, and I get that. But it's one more asset class I think that it's valuable for folks to get involved in, if not for anything else, the study of price action around seasonality. Between September and November, there's always a seasonal tendency to see stocks rally. It's a built-in model for the North American continent because we are indoctrinated to spend our asses off on Christmas, Thanksgiving, Halloween, New Year's. They make sure they get you really, really good. Okay, and it's everyone's, well, Michael, New Year's is really next year. No, because you're all getting drunk on New Year's Eve. That's technically December 31st. So you're spending a lot of money. You're dressing up in your best duds and all that business. So if you look at the seasonal tendency that takes place every single year, there's a strong tendency for stocks to rally. And the reason why is because that last surge of spending before the end of the year. A lot of rotation in the portfolio world. Folks are just simply trying to get that last bit of juice out of the lemon. And like I said, in the North American continent, our economy is driven by basically the last 3.5 months of the year. So if we understand this going forward, every single year, there is a seasonal tendency for stocks to rally at this time between September and November. I outline in that free tutorial how to pick strong leadership stocks by looking for institutional sponsorship behind the stocks that should go higher. Now in the Dow 30, the name obviously gives it away. There's only 30 components to that index. So it's a very quick approach to finding options if you're being prudent and you don't want to have a lot of exposure to shares, which is exactly how I advise you to do it. I don't think it's something that, well, there's no stock out there that I would feel comfortable buying the shares on. But for an option, it gives you the right but not obligation to own 100 shares every option you buy. So if you're expecting the price to go higher, then obviously you'll be looking for a call option. And while I'm not going to go through all the details about finding and selecting the actual premiums paid and what strike price for each one of these companies, I'm just pulling out ones that I saw that worked out really well based on the criteria. And once you see them pop up when I show you on a chart, you'll see clearly it's right there. It was. It's not hard to see because the pattern of seeing professional accumulation in stocks when it's predisposed to go higher which is what is indicated in the September to November time period every single year, some years are better than others. And obviously our market is the biggest Ponzi scheme in the world. We just keep buying and find some suckers that want to keep buying behind you. So every 10 years or so there's a washout. We're getting close to the next one. And if you probably heard or read in the news wires, there's some expectation that the Fed's going to raise interest rates. And obviously that's one of the wonderful things about what I was talking about a year and a half before we got to where we are now calendar-wise. Obama's about ready to pull his last do-si-do. He wants the elections to be investigated. He wants to have he wants to be able to call that card. He said that he is never going to get in the White House. He wants to be able to do that. And of course, Putin, he caused Trump to get elected and all that business. So we still are not over with the volatility, folks. A lot can happen between now and January 20th. So with all that, let's take a look at, this is the Dow Jones Industrial. This is a daily chart. And all this is free access. You can go on the internet, barchart.com. So for folks that don't have live data, it's not even essential to do this with live data. You can use end of day data. And I want you to focus in on between September and November time period, okay? In that window, there is generally going to be a signal formed by strong leadership stocks. Now, the barometer that we use to time the market, okay, is obviously the Dow Jones Industrial Average. This indice gives you an average, if you will, over the performance of those 30 stocks that make it up. Now, you can do a Google search real quick and find out what the actual components are, and it's real easy to do that and find it. And again, I'm not going to go through all 30 of them because I only have 15 minutes to go through the rest of the presentation. But for the sake of time and sparing you a lot of jawboning, I'm just going to take you to the ones that are most salient. But you can literally go through all of the 30 in less than 15 minutes. It doesn't take much time to do it. But what you want to do is you want to pull up barchart.com and go to the little symbol up here. Type in the $, D as in dog, O-W-I, and it'll pull up the chart here. And then you're going to go to this little toggle box here and go down the comparison chart. Once that's highlighted, you can input a stock symbol here, and we're going to put the first one in here as Boeing. Now, obviously, there's a contract issue right now that Donald Trump is bitching about how he thinks that Boeing is trying to overcharge the taxpayer for the cost of the new fleets that they're trying to purchase. But nonetheless, we're not going to go into that. We're going to look at Boeing, and we're going to repopulate this chart. Okay, and it's important, I failed to mention that earlier. You want to click on left price scale, so that way it'll give you a very close overlay against the underlying performance of the stock versus the Dow Jones Industrial. Now what I'm actually going to do is I'm going to reverse this so you can see the difference. The Dow Jones, we're focusing primarily between the September and November time period. So now I'm going to reverse so it shows it in different perspective, and reversing. So now actually you're seeing the performance of the stock relative to here's the lower low on the Dow relative to the September low. So just keep that in mind. That's the performance of the Dow Jones Industrial, went a lower low. I tweeted on the free Twitter that stocks were going to surprise folks, and I was expecting one more higher high, and everybody was, I'm expecting a crash too. Don't get me wrong. This thing's going to crash. This is all lipstick on a pig. This is not going to be a multi-year bull market. Personally, I believe what's going to happen is they're going to sink this thing between now and January 20th. If it ain't January 20th when it happens, okay, you can almost probably time the crash when Donald Trump gets in office. There's too many labels been put on this rally, the Trump rally. To me, I think it's the Trump pump and dump. Okay, I think that's what's going to happen. So to coin a phrase there for you, you can put that on a hashtag and run around with that one. But you can see that the stock on Boeing was failing to make a lower high. I'm sorry, lower low, while the Dow Jones was making that lower low. We teach in the tutorial for stock selecting that if the stock market is predisposed to go higher, like it does in September to November time period, and there's stocks that are showing relative strength. Now, I'm not talking about relative strength index or indicators, but relative strength in terms of the stock doesn't want to go down when the indice does. That's showing professional accumulation, and the stock has shown a really nice rally up, outperforming the market in a way. But that's one of the leadership stocks that was available this year. And the next one, we're going to look at CBX. Chevron failed to make a lower low, while the Dow Jones did make that lower low, and the stock has outperformed and done very well on the upside. Now, these are index stocks. Obviously, there's other companies out there that you can invest in with stronger fundamentals. But if you just want to be real quick, you don't want to get involved with picking out, one of 7,000 plus stocks that are available out there. You can use Investors Business Daily, go through that newspaper and use their fundamental rating system, which I still think is great. It's really good. But if you combine with what I'm teaching you here in terms of timing the market and then finding leadership stocks technically, and then look for those fundamentals behind it, like with CanSlim, all that's taught by William J. O'Neill. He has a really good stock selection, fundamentally based idea. But if you combine it with something technical like what I'm showing you here, man, is it a dandy. It's really, really good. It doesn't keep you in the market all year long, but it absolutely will give you a way of making considerable amounts of return that you wouldn't otherwise get if you stayed in all year long. But if you do this kind of trading with strong fundamental stocks rated by IBD, Investors Business Daily, and they're in strong weekly uptrends too, oh man, you got a loaded deal. That's like crazy. If you can get undervalued call options, it's easy money, really easy money. All right, so the next one we're going to look at is Goldman Sachs, GS. This one went ballistic. Dow Jones lower low. Goldman Sachs saying, I ain't having any parts of that decline. Thank you very much. The train has left Baltimore. Here we go. That's a huge move, folks. Huge move. And again, come to you by way of the stock selection technique I taught you for free. It's still up there and ain't going to come down. And we're going to take a look at the next one here. JP Morgan. Huge move right there. Again, lower low on the Dow. Professional accumulation won't let the stock go lower at a time when it's predisposed to go higher. You're combining seasonality, seasonal tendency for the stock to rally. You're seeing the Dow Jones dropping lower, but you're not seeing that same thing occur in JP Morgan. Off to the races it goes. Huge move on the upside. The next one we're going to look at is United Health. Failure to make a lower low, while the Dow Jones made that lower low. Nice accumulation, rallies away. And a very nice move for a Dow component. Upside leadership as well. And the last one I'll toss in here, it had a late divergence on its low. It's in Disney. I actually hate this company. I wish it would burn to the ground, but nonetheless, we had that lower low here on the Dow. We saw professional accumulation come in on Disney going into November, and the stock has moved up rather handsomely. And again, this is a nice move for a Dow component. Folks that trade stocks, they're always out there doing filters and searches and stuff, and they go crazy. And while they may get really good winners once in a while, I think if folks understood how the actual stock market worked and how it was rigged, it's a big Ponzi scheme. It's literally like 4th of July. In America, North America, Americans, we're all fat and overweight. All we care about is our greasy cheeseburgers, hot dogs, and soda pop. And on 4th of July, you expect to see what? Fireworks. You don't expect to see Christmas trees. You don't expect to see the Easter Bunny. You expect to see fireworks and your backyard grill burning. Okay? So if we understand that same seasonality or seasonal tendency occurs between September and November every single year, don't believe me? I want you to go and look into your charts and you'll see that's there. If you do this and you filter out the stocks that fail to make a lower low at that same time, you're actually seeing professional accumulation. There's no indicator needed because you're actually combining the relationship between a barometer or a major index like the Dow against its internal components. So what you're actually doing is you're getting an X-ray view of where large banks, large flows of funds, and accumulation is taking place. So they are accumulating $93 average price on Disney, and then the price goes up and extrapolates $10 per share. That's a big move for a Dow component. Some of you guys that are real hot shots that are into trading stocks, and you're trying to trade stocks that really, in my opinion, don't have any basis for you to be in there doing it. There are ways to do it, but for the most part, if you look around and anybody that's actually day trading stocks, you know what I'm talking about. These guys that get on there and they're on social media, oh yeah, I just made a half on this stock or that. To me, that's the worst form of gambling there is. I would rather trade Forex blind than day trade stocks. It doesn't make sense to me. And I'm sure there's 15 YouTube channels out there that would say I'm full of shit, but nonetheless, I'm not chasing that. And I'm not a Tim Sykes that's chasing penny stocks, which is even worse of a gamble. These are really strong companies that really make real money, okay? There's no guarantee, not that there's any guarantee that Disney won't burn to the ground eventually. One could be hopeful like I am, but Disney obviously is a giant. It's making money all the time. It's putting out movies and new products all the time. So until they stop making kids, this company's probably going to keep existing. So if we see a movement like this in a company like Disney, it's a huge money-making machine. So it's showing you there's professional accumulation underway. Also, Disney has a seasonal tendency when there's a strong movie route where when they put out strong movie showings for Thanksgiving and around the Christmas holiday. And Disney, I haven't really looked at it, but I don't need to because the price indicates that they're expecting strong performance. You see that in the underlying stock price. So the market did rally as well. Now you can go through all the 30 stocks. This is probably faster, obviously, than what I'm doing here. And it literally takes seconds to see the professional accumulation pattern I teach that's inside that stocks selection module. The wonderful thing is you don't have to go in and trade every day. You don't have to trade every month of the year. You literally keep your money in park all year. And then you save up all year long. You get a couple $1,000s saved up and put that money to work in buying call options. And you buy call options in as many as you possibly can afford on the leadership stocks. And you hold it until we get to at least the very minimum January 1st. That's what you're trying to do. You're trying to hold it for January 1st. Me personally, like I teach in the teaching, I'm looking for the first week of February. That's generally when I'm looking the bail on mine. But the runs can last as long as the last week of March going into April. That's in my study. That's what I've seen as a long end. But because I'm short-term minded and I don't really want to overstay my welcome, I'm looking to get out. And to me, on a year-to-year basis, except for this year, which I did not participate in because of the reasons why I told everybody, and it was all on YouTube when I did it, I was not going to be trading this year because I just didn't want to be a part of anything that would otherwise hurt me. Because I'm not really, I'm not trading 5 call options on these things. I'm putting pretty significant amount of money in like $50,000 behind each of the stocks, and I'm buying as many call options as I can because I'm waiting for that really choice setup. And it's very easy to do 7 figures a year just doing this. Once you're a larger trader and you put more money behind the moves, it's easy to take down big hauls like that, and you're not vested all year long, and you don't need a lot of money to start. You can start with a shoestring budget. Some of you single moms out there that are looking to get into trading, you can't really do Forex, you really can't do futures or any other form of trading. this form, if you can come up with like 2,500 bucks, there's some brokerage firms out there that, you know, can get you started with that, and you don't need to put the whole $2,500 in. You know, you can buy 1 or 2 call options the first time you do it, and man, if you make 300% on your money, that's going to quickly convince you that it's worth it to do this. Get a second job, work the whole year, save that money up, get your spouse on board with it, you know, try to get your kids into the idea as well, because you can start them with this idea. We're multiplying your money. Do the interest on all these moves here. Just simply look at it and see how fast. You don't need a bank account to give you interest. You can outperform any bank or any kind of CD rate, all that stuff. And you can be doing it with your own money and you managing it yourself, because no one's going to look after your money better than you do. But that's it, children. I'm going to escape. Appreciate you coming out, hanging out with me. I'm going to put this recording on YouTube tomorrow. It won't be on their servers tonight, but I'll have it up there tomorrow after I'm done working with my private group. But I felt that it was something to take a look at now. Some of you guys probably forgot about the stock stuff, but it's right there. And if you look at all the other stocks that failed to make the higher low when the Dow Jones was making that lower low in October into November, all through that period, the stocks that made lower lows with the index actually really didn't do well at all. You might have seen like a little bit of a pop, but other than that, it didn't really do much at all in terms of the upside. But the ones that failed to make that lower low, look what they did. They're really strong on the upside. So until I talk to you again, Munchkins, I wish you good luck and good trading.